Welcome back to TQFM Trading Strategies. It's always a pleasure to have you here with us. If you're new here, we discuss and test technical analysis-based trading strategies and talk about the markets. So if you're into that, make sure to subscribe to the channel for more valuable trading content. Today, we're about to embark on an exciting journey into the world of cryptocurrency trading. So, grab your favorite trading notepad and let's get started. In this video, we've got something special lined up for you. We're going to explore a powerful scalping strategy that harnesses the incredible potential of not one, not two, but three dynamic indicators, the Heikin Ashi, Ichimoku, and Alligator indicators. And we're going to put this strategy to the test on none other than Bitcoin's wild 1-minute price data. Now, if you've ever wondered how to navigate the lightning-fast world of cryptocurrency trading, this video is tailor-made for you. These indicators, when used in combination, can provide you with a scalping strategy that's not just effective but also precise. But before we dive headfirst into the action, let's take a moment to understand each of these indicators and why they're such a game changer. So, whether you're a seasoned trader looking to refine your strategy or a newcomer eager to learn, you're in the right place. So, without further ado, let's unpack the magic of Heikin Ashi, demystify the Ichimoku cloud, and learn to ride the alligator's momentum as we explore this fascinating scalping strategy. Stay tuned because by the end of this video, you'll have a clear roadmap to potentially unlock profitable trades in the blink of an eye. Alright, folks, let's not waste any more time. The crypto market waits for no one. Are you ready to take your trading to the next level? Let's do this. Now, before we delve into the nuts and bolts of our Heikin Ashi Ichimoku Alligator indicator combo, it's crucial to grasp why scalping is a must-have technique in the cryptocurrency trading arena. Cryptocurrency markets are known for their incredible volatility. Prices can swing dramatically in a matter of minutes, and that's where scalping comes into play. Scalping is all about making quick, small profits by capturing these rapid price movements. But, and this is a big but, it's not as simple as it may seem. Attempting to scalp without a well-thought-out strategy is like trying to navigate a stormy sea without a compass. It's risky, and you might find yourself adrift. This brings us to the core of today's video, the need for a reliable strategy. In the fast-paced environment of cryptocurrency trading, a strategy acts as your guiding star, helping you navigate through the chaos with confidence. Imagine having a set of tools and techniques that not only help you identify potential entry and exit points, but also allow you to manage risk effectively. That's what we're offering you today. By combining the power of Heikin Ashi, Ichimoku, and the Alligator indicator, you'll gain the ability to read the market with greater precision, increasing your chances of making profitable trades even in the most turbulent conditions. So, by the end of this video, you'll not only understand how these indicators work, but also how to integrate them seamlessly into your trading strategy. It's like having a weather forecast for the crypto market, allowing you to set sail with confidence even when the waters get rough. Now that we've established the significance of scalping and the need for a solid strategy, let's roll up our sleeves and dive into the fascinating world of Heikin Ashi, Ichimoku, and Alligator indicators. Alright, let's start by shedding some light on Heikin Ashi candles. These are not your everyday candlesticks, folks. They have a unique way of smoothing out price action, making them an invaluable tool for traders. So, how do Heikin Ashi candles differ from traditional candlesticks? Well, the key distinction lies in their construction. While traditional candlesticks rely on open, high, low, and close prices, Heikin Ashi candles take a different approach. Heikin Ashi candles are calculated based on the average of the open and close prices, which creates a smoother and less noisy representation of price action. This means they react more slowly to price changes, reducing false signals and noise. Now, let's talk about the default settings. When we use Heikin Ashi candles, we typically don't need to adjust any settings. The default settings work perfectly for our scalping strategy. So, no need to worry about tweaking anything there. Moving on to the Ichimoku cloud, this indicator is a game changer in the world of technical analysis. It's like having a multidimensional view of the market's past, present, and future. The Ichimoku cloud is composed of several elements, each with its own role in helping us make sense of price action. Let's break it down. First, we have the Tenkan-sen, which is often referred to as the conversion line. It represents the average of the highest high and lowest low over a specified period. Next, we have the Kijun-sen, or the baseline. It's similar to the Tenkan-sen but calculated over a different period, providing a different perspective on price momentum. Now, the Senkou Span A and Senkou Span B together form what's known as the cloud. These two lines project into the future and act as support and resistance levels. And last but not least, we have the Chikou Span, which is essentially the current closing price plotted backward on the chart. It helps us gauge potential areas of support and resistance in the recent past. And just like with Heikin Ashi candles, we're sticking with the default settings for the Ichimoku cloud in our strategy. These settings have been carefully chosen to align with our scalping objectives. Now, let's sink our teeth into the alligator indicator, which might sound ferocious, but it's actually your ally in the crypto jungle. The alligator indicator consists of three components: the jaw, the teeth, and the lips. These intriguing names represent the different moving averages and their relationships. The jaw, represented by a blue line, is the slowest moving average and corresponds to the 13-period smooth moving average, SMA, at the midpoints of the price bars. Next up is the teeth, depicted by a red line. It's a bit faster and corresponds to the 8-period SMA at the midpoints of the price bars. And finally, we have the lips, which is the fastest of them all. The lips is represented by a green line and corresponds to the 5-period SMA at the midpoints of the price bars. But here's the beauty of it: just like with our other indicators, we're sticking to the default settings for the alligator. These settings are finely tuned to our scalping strategy. So, there you have it, a crash course in the key indicators we'll be using in our scalping strategy. Now that we've got the basics down, let's combine them and unleash their power in the world of Bitcoin 1-minute data. Alright, traders, now it's time to dive into the heart of our scalping strategy. In this section, we'll break down the core concept, entry points, and the all-important risk management aspect. Our strategy's core idea is relatively straightforward yet incredibly effective. We'll be hunting for trading opportunities when the alligator indicator opens up its jaws and starts moving above the Ichimoku cloud. Now, why is this concept so powerful? The logic is simple. When the alligator indicator awakens from its slumber and starts moving above the Ichimoku cloud, it signifies a potential shift in market sentiment. This could signal the beginning of a strong bullish trend or a reversal from a bearish trend. But, and this is crucial, we don't just dive in blindly. Risk management is our guiding principle. We'll emphasize it throughout this video because, in the fast-paced world of scalping, protecting your capital is paramount. So, how do we identify those entry points that align with our concept? Let's break down the criteria for entering a trade in detail. First, we'll look for a bullish entry signal. This occurs when the alligator's jaw, teeth, and lips cross above the Ichimoku cloud. This alignment suggests a potential bullish momentum. Conversely, for a bearish entry, we wait for the jaw, teeth, and lips of the alligator to cross below the Ichimoku cloud. This signals a possible bearish trend. But here's the kicker: we don't rely solely on these crossings. We emphasize confirmation. This means we look for additional signs of strength or weakness in the market, such as candlestick patterns or support and resistance levels. Remember, scalping is all about precision, and confirming the alligator's move with other technical factors increases our confidence in the trade. Now, let's talk about the unsung hero of trading: risk management. In the world of scalping, it's not just important, it's absolutely vital. Here's why. Scalping involves making numerous quick trades, and not every trade will be a winner. That's where risk management steps in to protect your capital and ensure you're in the game for the long haul. To manage risk effectively, you need to set stop loss and take profit levels. The stop loss is your safety net. It's the price at which you'll exit the trade if it goes against you. Always place your stop loss orders to limit potential losses. On the flip side, The take profit level is where you lock in your profits. This is the price point at which you'll exit the trade when it's moving in your favor. It's essential to set a take profit level to secure your gains. But, folks, here's the golden rule of risk management: maintain a favorable risk-reward ratio. In scalping, aiming for a risk-reward ratio of at least 1 to 2 is a good starting point. This means that for every dollar you're willing to risk, you should aim to make at least $2 in profit. By sticking to this principle, you can afford to be wrong in some trades and still come out on top in the long run. So, remember, our scalping strategy isn't just about spotting opportunities, it's about safeguarding your capital and ensuring your trading journey is a sustainable one. Now that we've laid down the fundamentals of our scalping strategy, it's time to put theory into practice. Stay tuned as we move on to the practical application segment, where we'll demonstrate how to set up and test this strategy on Bitcoin 1-minute data. Get ready to witness these indicators in action. It's about to get exciting. Before we dive into the practical application of our scalping strategy, let's talk about a crucial step in any trading approach: backtesting. Backtesting is like a crystal ball for traders. It allows us to peer into the past and see how our strategy would have performed under different market conditions. It's not just important, it's absolutely essential. Now, let's take a moment to put our strategy to the test. We'll show you the results of running this scalping strategy on historical Bitcoin 1-minute data. This step isn't just about showing off. It's about gaining confidence in your strategy and understanding how it performs in different market scenarios. Once you've entered a trade using our scalping strategy, the next crucial step is monitoring it effectively. Keep a close eye on the price movement and market conditions. Here's when you might consider adjusting your stop loss or even taking early profits if the trade is moving in your favor. Speaking of exits, let's discuss the criteria for exiting a trade. It's just as important, if not more, than the entry. Your exit criteria should be clear and well-defined. It could be hitting a predetermined take-profit level, seeing a reversal signal, or any other factor that aligns with your strategy. And remember, discipline is key when exiting trades. Don't let emotions drive your decisions. Stick to your plan. To wrap things up, let's recap the key points of our scalping strategy. We've covered the importance of combining Heikin Ashi, Ichimoku, and Alligator indicators, identifying entry and exit points, and the absolute necessity of risk management. But here's the golden nugget: practice and discipline are your allies in this journey. It's not about a single trade, it's about the consistency and mastery of your strategy. We're almost at the finish line, but the conversation doesn't end here. I want to hear from you, our amazing viewers. If you have any questions or want to share your trading experiences, don't hesitate to drop a comment below.
And here's a friendly reminder: before you dive into the live markets with this strategy, practice, and practice some more. Consider using a demo account to hone your skills and build confidence. Thank you for joining us today on this exciting journey through the world of scalping with Heikin Ashi, Ichimoku, and the Alligator indicator combo. Your support means the world to us. If you found this video valuable, please show your appreciation by hitting that like button, subscribing to our channel, and ringing the notification bell. It helps us keep creating content to empower traders like you. And remember, your success in trading is a journey, not a destination. Keep learning, keep refining your skills, and keep your discipline intact. Until next time, happy trading!